Hey guys, it is Julie here with TipRanks, and today we're taking a look at the top holdings in the number one ranked hedge fund. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Now you may or may not know that TipRanks not only ranks over 8,400 Wall Street analysts, but they also track the performance of other professionals, including corporate insiders, financial bloggers, and hedge fund managers. So we're going to use the My Expert Center to take a look at the top performing hedge fund and what stocks are at the top of their holdings. Today, we're headed under the Expert Center to top hedge fund managers where we'll find our ranked list. In the number one position, we have Christopher Niemczowski with Marshfield Associates. They have assets under management of $3.24 billion and have had an average return of 42%. Marshfield Associates was established back in 1989. They are a concentrated, long-only value investment advisor. The companies they seek have three key attributes, being resilience, long-term growth potential, and experienced management and a robust corporate culture. Taking a closer look at the hedge fund, we can see their portfolio breakdown by sector, with a large portion being in consumer goods and financials. Here we can see that they have very much outperformed the S&P 500 and other average hedge funds. In this $3.2 billion portfolio, there are three companies that hold an over 10% position size. In the number one position, we have Ross Stores. They have a value reported of over $355 million, making up nearly 11% of their portfolio. And we can see that the hedge fund has been adding more of these shares along the last year. Ross Stores operates their Ross Dress for Less retail chain across the United States. They are the largest off-price apparel and home fashion chain in the United States with over 2,000 stores. Trading under the ticker ROST, their stock is currently priced at $101 per share. Now they have seen growth of nearly 15% over this past year, but have fallen about 11% in this last quarter. While Marshfield Associates have been adding shares of Ross Stores, we have seen other hedge funds decreasing their positions. In the last quarter, we can see that hedge funds decreased their holdings by 1.2 million shares to now just over 59 million being held by hedge funds. Under the hedge fund activity, with the biggest positions, we can see some small drops of about 1% or less, and a couple trimming their positions a bit more by 20 and 34%. The company did post an earnings and revenue beat in their last quarter, and their next one will be coming up soon on May 18th. Analysts will be anticipating earnings per share of $1.06, which would be an increase year over year. Now, we did have one earnings miss last year, but they've been fairly consistent and exceeding those expectations. The company does also pay a dividend as well of 34 cents per quarter for a dividend yield of 1.21% and a healthy payout ratio at 28%. So, how do the analysts weigh in? Well, there are currently 14 ratings on the Ross Store stock. And it comes in as a strong buy based on 12 buys, 1 hold, and 1 sell. The average price target of $122 would be an upside potential of 20%. And the most recent rating came in just yesterday. Now we do have our one bullish sell rating with a downside of 24%, but then the handful of others all range around 20 to 26% upside potential. The second largest holding in Marshfield Associates goes to Arch Capital Group. They hold about $351 million of this shares, making up just over 10% of the portfolio. Now, they have been selling off their position this past year slightly, while the stock has been gaining. Arch Capital Group provides property and casualty insurance and reinsurance lines. Formed back in 2001, the company writes insurance, reinsurance, and mortgage insurance on a worldwide basis with a focus on specialty lines. Arch Capital has total assets of over $51 billion and total net reserves of $14+ billion. Trading under the ticker ACGL, their stock has climbed 67% in this past year, and it has been some pretty steady growth, 31% in the last 6 months and 19% in just the last 3. They're currently priced just shy of $77 per share. As their stock price has climbed, we have seen a decrease in the amount of hedge funds holding their shares. In fact, this last quarter, we've seen a decrease of 3.9 million shares, bringing it down to just 17 million. Taking a look at our hedge fund activity, we can see Marshfield Associates with their slight reduction, but a couple other companies selling a big chunk of their holdings, while we do have some taking up some brand new small positions. They just reported their latest earnings a couple weeks ago on April 26, where they had an earnings beat and saw their net premiums written increase 30% to $3.42 billion. Earnings per share came in at $1.73, which was a beat by 28 cents per share. The next one will be coming up on August 1st, where they're anticipating earnings per share of $1.60. Arch Capital Group currently has 9 analyst ratings, coming in as a strong buy based on 8 buys and 1 hold. The average price target comes in at $81 per share, which would be an upside of nearly 6%. And here we can see those recent ratings. We have a lot of 5-star analysts coming in, which are good, with some very reasonable price targets, so nothing too outrageous. And the third largest holding for Marshfield Associates goes to AutoZone. For the AutoZone stock, they hold just shy of $340 million worth, about 10.5% of their portfolio. And this is another where we've seen them making some small sell-offs in their position as the stock has gained this past year. Incorporated back in 1979, AutoZone is a well-known automotive retail chain. They are the leading retailer and leading distributor of automotive replacement parts and accessories in the U.S. Now, the AutoZone stock has not gone through a stock split since back in 1994, so it is a fairly expensive stock. Trading under the ticker AZO, their stock currently trades above $2,700 per share, and it's another one that has seen some really great growth over the past few years. They're up nearly 40% this past year, 10% the last 6 months, and another 8% in the last quarter. And once again, with that kind of growth, we have seen a lot of hedge funds trimming their positions. In the past quarter, hedge funds decreased their holdings by just about 34,000 shares, taking us down though to a still impressive amount at 208 million. Down here we can see that our Marshfield Associates does have the biggest value reported in the stock, but there have been many that have been selling out and taking some of those profits recently. AutoZone will be reporting their next earnings report on May 23rd, where analysts are anticipating earnings per share of over $30. And of course, that seems like a high figure, but with a very expensive stock, it is in line. And the company has reported figures like this, exceeding all of the last earnings expectations in this couple of years. Their stock currently has 14 analyst ratings, coming in as a moderate buy. That is based on 10 buys, 3 holds, and 1 sell. And the average price target actually comes in with a slight downside here. You can see the stock has been growing, and we do have one low-end rating dragging us down. We do have a most recent rating coming in today with an upside of over 5% and a lot around those low single digits. And then as we get a bit older, a couple months old, we do have that big sell rating that's pulling down our average. So there we have the top 3 holdings in the number 1 ranked hedge fund of Marshfield Associates. Now they obviously have some sizable holdings in these 3 companies, but have been trimming their position in a couple as the stocks saw some sizable gains. So let me know your thoughts in these companies. Were they on your radar before? Do you think they still have some more growth potential ahead? Let me know your thoughts in the comments. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with some things going on, providing some entertainment and information. Make sure you always do your own research and due diligence before making any investment decision. Don't forget to hit that thumbs up button and make sure you're subscribed to the channel as well. Thanks so much for watching and have a great day.